Oh. Oh, no, 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 no. No, 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 no. Oh, my. Let's see. Oh. Oh, no, 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 no. It's not good at all. No, that's not good at all. Maybe. No. No, no, no. Not even close. That is unfortunate. Oh my. Okay, let's make a note of that. Now, welcome. I'm so sorry I didn't see you there. Please don't pay attention to what I was doing. I was actually just doing a little bit of work on your account. Please come in. Take a seat. Make yourself comfortable. Welcome to Lilac and Associates, or I should say welcome back. We are very, very grateful for you taking the time out of your, well, I imagine, very, very busy schedule to come down here and just have a quick discussion with us. Now, as you know, we are currently in the tax planning season, so we really want to get into contact with all of our clients, do a little bit of preliminary planning, get a sense of, what they've done, how business has been going in your case, over the course of the past 3 quarters. That way, when we do reach the end of the year and then start the tax preparation process, we have all the necessary information to really make good, informed decisions. Second reason why we ask you in here is to really make sure, of course, that your tax situation heading into tax season is as beneficial and is as well maintained as possible. Now, we've been in contact with your bookkeeper, with your staff. We've been getting all sorts of reports, numbers from them, and we've even received some numbers from you, which thank you very much for providing those. We really do appreciate it. It makes our job so much easier. But, the reason that we've been doing so much work on your particular account, and the reason why we've been in such contact with you is because, well, quite frankly, and I'm trying to be as delicate as possible here, you must understand, but quite frankly, there's an awful lot to be concerned about, an awful lot wrong with your bookkeeping at the moment. Now, I know, I really do, that that's never what you want to hear as a business owner. But I'm afraid that, well, between a few transactions, which we've noticed, and between some of the treatments that both you and your bookkeeper have been applying to your business, we're a little bit concerned. Now, as you know, we here at Lilac & Associates, we only cater to clients like yourself of a particular wealth, of a particular standing, and a particular ownership class, shall we say. So you, with your wonderfully large and extraordinarily profitable company, we really do want to make sure that as we enter into tax season, we want to have everything as buttoned down as possible and everything in as advantageous a state so that we can really just immediately begin preparing everything. And we won't have to go through that old process of, we've noticed something now, we only have a few weeks left, and we're rushing and running around all willy-nilly. It's a whole big hullabaloo. And there's all sorts of problems, and, well, it stresses us out, of course. It stresses you out, and, well, that's not what we want at all. We here at Lilac & Associates, we want this to be the most comfortable, most seamless, and just in general, a process you don't even have to think about, a process so easy, a process so intuitive, right, that we're able to get our portion of the job done so quickly, and you're just stress-free, yes. But unfortunately, in this case, there are a few causes for stress, yes. It seems that, well, a few of the treatments you've applied, and, well, I won't get into a whole lot of detail right at this moment. I won't. But, unfortunately, it looks like your books are a little messy. Quite messy, to be honest. So there's an awful lot of work to be done between now and tax season, cleaning everything up. We want to bring you in here to alert you to this potential issue, very real issue, and really get a better sense of what's going on. We believe that even as your company's growth has exploded is a very good word. Exponential growth, I believe, is even better to describe your very, very wealthy, very, very positive income situation, even as all those very positive changes have been taking place. Unfortunately, the bookkeeping has slipped a little bit, and as we can see that you've encountered a few more novel situations, tax situations, bookkeeping situations that unfortunately have not been fairly represented. And it's a problem that we'd like to address now so that we can take care of it. Quarter 4, we can make sure that these problems don't happen again. And then moving forward, everything will be much easier. The books will be much more accurate is the word I'm looking for. Accurate moving forward, and we won't have to call you in under these certain circumstances ever again. No. We wouldn't want to do that. We would not want to do that. We like to have these types of conversations once, and only once, and then never again. Yes, because we don't need to have them ever again, because all the problems have been taken care of. That is the lilac way, yes. So, without further ado, well, unfortunately, it's the difficult portion of our meeting. Yes. I do hate to stress you out. I hate to stress any of our clients out, but you and I, we've had such a rapport. You've been coming to us now for years and 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 years. So long, and you and I, we've both been able to really become more embedded in our fields. Your company, of course, has become a veritable, I should say, titan of its industry. Yes, a titan of the industry. I've become a partner here at the firm, and we've been making some very positive changes. So you and I have a great deal of respect for you, and I really want you to succeed, but a lot of this bookkeeping, sloppy, and what's worse, seems to be getting worse, yes. So we could not bear it any longer. We could not put it off any longer, and we've got to have that difficult conversation starting now. The first account, that we have a really great deal of concern about, is your equipment purchases account. Now, as you know, of course, equipment purchases is an expense account. It's an account that within our current fiscal year directly offsets income. Yes, it's not an account that is going to, have an ongoing expense. Everything is expensed in the current period. That's the technical explanation. Equipment purchases we typically expect to be rather low, right? Maybe needed a new monitor, maybe a new printer. Nothing crazy, nothing large. Your expense account, very relative to the size of your business, much too high. much too high equipment purchases. In fact, it's about $1.5 million above what we believe it really should be if it were being fairly represented. Now, you must understand, even though your company is growing at an exponential and very impressive rate, $1.5 million, $1.5 million is still a large and very material misstatement, so we want to get that corrected. What we can see, basically, is that you've been purchasing an awful lot of computer and building-related assets. You could do that renovation on your one building. Very, very nice. By the way, I did see the pictures in the paper. Very, very nice. But that's a fixed asset. That's a capital asset. It's certainly not equipment. It's been misbooked. Yes, misallocated to the expense account when it really should be booked to your asset account for buildings and other depreciable assets, right? In depreciation, we've talked about this before, but I do want to remind you, depreciation is simply taking an asset, piece of equipment that has a life longer than 1 year, an expected life of longer than 1 year, and expensing that asset over the course of its useful life. So we don't want to take all of the expense of a very expensive or valuable piece of equipment in 1 year, because that's misrepresenting. Yes, misrepresenting how it really should be represented. All that to say that, well, there's about $1.5 million of misallocated, yes, expenses. Now, what are we going to do about it? No worries. This, luckily, is a very simple fix. We've put your fixed asset purchases that have been misallocated, we've put them into a fixed asset schedule. We'll provide this to your bookkeeper, and she can reallocate everything and make the adjustments on your end. Now, you know, of course, we do have access to your accounting records, but we can't change anything, right? We don't change anything for you, so we'll provide that information to you, and we'd really like to see you make those changes, but it's not something that we can do for you. So the onus of this particular adjustment, we call them adjustments, will be on you. Now, the thing that we don't want is for you to make this change, right? Make this adjustment, and then moving forward, fall back into that nasty habit of over-reporting equipment purchases and under-reporting asset purchases. This will cause all sorts of problems in the long term for your business, and if you are ever to be audited, it may even cause some very real tax or legal consequences, yes. So this is something that we really want to address right now, yes. We really want to address right now. Now, for the purposes of your business, an asset purchase, equipment purchase, anything of more than $2,500 needs to be made a capital asset and then depreciated or amortized, which is just depreciation for intangible assets like patents, for example, right? Like patents, for example. Needs to be depreciated or amortized over its useful life. Anything under $2,500 can remain expensed, okay? So that is the first issue that we've seen. Now the second issue, we've been taking a look at your meals and entertainment expenses. Typically for a business of your size, we expect the meals and entertainment expenses to be within a certain range, right? Certain range. Yours are quite a bit higher, about $45,000 higher than we would expect. So we took a look through everything, and it really seems like, unfortunately, a lot of those expenses are much more personal use. use than they are business expenses. I'm assuming that you provide all of your receipts when you're out to eat to your bookkeeper, right? Yes, this is a common practice that we see, but unfortunately, it's not really acceptable from a tax accounting perspective. So, although you may have been out to lunch and you were, technically speaking, on the clock, right? On the clock, you were doing work for your company before and after. Unless you are explicitly, and let me say that again, unless you are explicitly discussing business and only business during a meal, you cannot expense it. You might be thinking, well, sure, I know I mentioned business once or twice while I was on those meal outings when I was having my meal. And that's okay, but unless you have a strict record of what was said, so an actual note dictating what was being discussed, it's not a valid business expense, right? It can't be actually classified as meals and entertainment expense. And the IRS is quite strict about this, especially now that meals and entertainment for this particular tax year are 100% deductible. It used to be only 50% deductible, but now fully deductible from your income, right? Even so, they're really cracking down because they've expanded that deductibility. They really want to make sure, yes, they really want to make sure that it is only business meals that are being taken as expenses. And I don't think, in your case, that that argument will hold up, unfortunately. Now, again, we'll provide you with another adjustment, and we would really suggest that you make this one. Meals and entertainment tend to be one of those hot button expenses that if the IRS notices that something is awry, that your expenses are outside of a certain ratio, well, unfortunately, it really indicates to them that you may be in need of an audit. I know I whisper it because I don't even like saying it, but you may be in need of an audit, which of course is just a headache unto itself. So we want to avoid that as much as possible. So we have provided you, or we will provide you with, I should say, a list of all the expenses which we just were questioning when it comes to meals and entertainment, yes. And we'd really like for you to adjust those out of your expenses and then really be keeping a much stricter record moving forward of what you discussed during particular, business lunch, if it really is a business lunch, or just accepting that some things are unfortunately only personal expenses that can't be deducted, yes. Now let me think, because those were two, but there were a few things. Here we are. Yes, we noticed a few money transfers, which, well, they were just a little inconsistent with what we would expect. Upwards of $50,000 per transaction being made out to what we perceive as just people, correct? Yes. So, unfortunately, and based on the names, we can pretty well assume that these are people who are related to you, yes? Yeah. Unfortunately, again, those are not business expenses. We classify those as owner draws. You're drawing money out of the company, and then you're gifting it, right? You're gifting it to those people. Now, unfortunately, regardless of, whether it's for medical expenses or just because you're feeling particularly generous and you being such a wealthy person, I can imagine that that is an occasion that has happened where you're just feeling particularly generous and you'd like to make a little bit of a contribution to someone. We do see a couple, looks like, expenses for education as well. None of those are tax deductible, certainly not the business level, right? certainly not at the business level. Those are just owner draws. What they affect is just your equity account, just your owner's equity. They do not, I must repeat this, they do not, no. They do not appear at all on profit or loss statements. They just affect the balance sheet, owner draws. And they're not deductible at all at the business level, and except for some of the education contributions to those 529 plans that we saw, they're really not deductible at the personal level either, okay? Additionally, because you have just confirmed to me that they are gifts, we're going to have to file a gift tax return for you this year. Now, normally gift tax returns are really of no consequence. The cap for the gift tax return that you have to exceed on an annual basis, that threshold is well into the tens of thousands of dollars now, so most people don't reach that. You, in this case, have reached that, crossed it, and we must file a gift tax return now. Based on the totals, you did not exceed, right? You did not exceed the $12 million lifetime exclusion for gift taxes. The gift tax is a whole can of worms that I really don't think we have the time to get into, certainly not, unfortunately, with some of the other issues that we still have to discuss, but we will have to file a gift tax, and you and I, we can sit down and discuss that at a different time, but right now we just want to give you the adjustments, really. So a gift tax return normally has no tax consequence, and for this year probably won't, but if you continue on the same pace of gifting the amount of money that you have, and because you're oh so fabulously wealthy, I anticipate that it will be the same, yes. And I anticipate perhaps even, the same similar gifts in this next year, or perhaps, seeing how well you're doing, even larger gifts. We may be facing some gift tax consequence in the future. Again, because that's a whole separate tax system, you and I can discuss that at a different time, but for now, let's just stay focused on these issues that we've noticed, okay? So that is another concern, is, trying to expense these owner draws, which are actually personal gifts. We don't want to do that anymore. Absolutely not. Because not only will that get you audited, and it will, but that could really cause your income numbers to shift and could lead to some very real tax consequences. There are two more items, 1, 2, which I want to discuss with you tonight, right? 1, 2. Other than what we've already discussed with, not quite applying some of the accounting principles we've discussed previously in the right way. Remember, any gifts, anytime you personally take money out, it can be an owner draw. That's not an expense. It can be an owner draw from the business, which only affects equity, but it cannot be an expense. The final thing is, we notice that you've purchased a few vehicles, right? A few vehicles, which are rather expensive and which you've financed. You haven't purchased them outright. Well, I do think that this is, of course, the smart way to do that, but we did notice that you've been expensing your loan payments. You can't expense loan payments. You can only expense the interest that you pay on the loan, right? Because what you've done is you've purchased a capital asset and created an associated liability, right? You haven't created an expense that's associated with the asset. You've created an associated liability. Now, those are two balance sheet accounts, right? Two balance sheet accounts. Nothing would touch the P&L except for the interest, which is tax deductible. That is a valid expense, but right now things are pretty out of whack. Might be something that how we would refer to this. They're pretty out of whack, and we don't like to see that, not one bit. So we've made, again, a few adjustments. We really would like you to make these adjustments. We really have to encourage that. And finally, in addition to the loan payments and all that stuff, we noticed that, unfortunately, some of the book reconciliations that we provided to you last year had not been made. They hadn't been made. No. Hadn't been made. We, of course, we can adjust in the current year for those prior year adjustments, but we were concerned. You had seemed very receptive. You seem very receptive now to what we were discussing previously, but, well, it didn't translate. And we get concerned when that happens. We get concerned for two major reasons. First, of course, is we really want to make sure that you know just how valuable the insight that we're providing is and just how important those changes are. But the second is that what makes our process much more difficult to complete, and unfortunately it passes those costs on to you. So while the adjustments themselves are simple to implement, right? For us to go back and try to retrofit all of prior year's adjustments onto the current year and then, make all the current year adjustments, it can be time consuming. And when we have a time consuming process, unfortunately, it's just the nature of our business that we simply must, we have to transfer at least a portion of those costs onto you, the taxpayer in this situation. And we don't like doing that, not one bit. We do not like to do that because, well, you're already paying taxes, you're already paying us for our expertise. You shouldn't have to pay even more money, right? You shouldn't have to, especially when the solution is so simple to implement. But unfortunately, it's been pretty clear that we can tell that there's been a disconnect. Would you care to, comment on that, please? Okay, so you've actually changed bookkeepers, and that's probably why those weren't implemented. That's okay. That is, you know what? That does put me at ease a little bit, because I was a little bit concerned that the relationship that you and I have been developing for so long, this professional relationship, which in my personal opinion is quite mutually beneficial both to you and to myself, may have been affected at some point. Yes. So you just changed bookkeepers, okay? And you think as well that might be the source of some of these other problems. Okay. Well, that is reassuring. Now, of course, we can have conversations with this bookkeeper. We'd be happy to do it and kind of update that particular person about some of these changes that we're making. And we'd really like to have a conversation with them, actually, because we were assuming that perhaps these were coming from the top, but maybe they're just honest mistakes, right? That somebody's making, they think they're booking to one thing, it's actually being booked to another. You know how it goes. Okay. Well, that is, again, that's very reassuring. We do so appreciate your communication with us here. Excellent. I must say that's good to hear. Now, there is one final bit of information. See, when we were looking through your books, we were looking for those estimated tax payments being made, right? That we had talked about last year, in the prior year, I should say. And we were looking for those amounts being, taken out as an owner draw and then paid, or we were looking for indications that those had been paid by the company. And we couldn't find them. We checked with the State Department and tried to check with federal, but we weren't able to get through, unfortunately, before our meeting here today. So we'd really like to have that conversation. Now, have you been making your estimated payments? Okay. Probably another symptom or another casualty of this bookkeeper change, right? Okay, that's no problem. That's no problem. We're just going to slightly update and adjust your fourth quarter payment to encapsulate not just quarter four, but also quarters 1 through 3, okay? It'll be more expensive, but trust me, it's not worth the penalties and interest which are going to continue to accrue over these next few months before your filing deadline. We don't want any more payments, any more money that needs to be paid because of some of the miscommunications which we've been experiencing. So, we're going to transfer all this information to you and to this new bookkeeper, okay? And then we'll probably have a phone call or two, which we will not bill you for, okay? We're not going to bill you for that. We've had such an excellent relationship. We don't want this one little mishap, really, just a bit of miscommunication to in any way define your experience with us. So we won't bill you for that in the slightest. But we do want to have a one-on-one conversation, myself and this new bookkeeper, and really put to bed some of these issues and make sure that, next year, next fiscal year, and for the remainder of this fiscal year with quarter four, that we're not encountering any of these additional problems, okay? And that everything is being fairly treated, fairly represented, and that we'll have to make far fewer adjustments when we get your books there towards the middle of January, okay? Good. Thank you very much again for coming out here tonight. We do so appreciate you taking time out of your day and being willing to discuss with us this topic, which I know from experience, I know can be a little bit uncomfortable, okay? So we really do appreciate it. Thank you for coming out. Thank you for being so receptive as well. And we'll be in contact, we'll be in discussions, we'll get all the information which we've discussed to you. And that way we can really start to make some of these adjustments. And we can avoid a lot of mistakes and a lot of additional hassle, headache, and most importantly, money spent in the future, okay? Those fees, interest, we can avoid all of that. Wonderful. Now, I will keep an eye on everything moving forward. Make sure that everything's being implemented. I'll alert you if anything needs changed or if problems are still persisting throughout the coming months, but I expect that everything will be sorted out in these next few days with the conversations we'll be having. When it does come to, when it comes to the individual tax filing deadline, that April 15th filing deadline, of course, that the corporate tax for your company is 1 month prior, so March 15th. We will be addressing gift tax and all of that good information, making sure that all of your deductions are being represented on that you're eligible for, of course. All the deductions and credits are being represented on your individual tax return, but it's a little far out to be doing any sort of planning like that. So for now, you make those adjustments. We'll have those conversations with your bookkeeper, and we'll work everything out over the next couple of days, monitor the situation. Then by the time tax season rolls around, my goodness, how wonderfully smooth, seamless even, this whole process will be. Again, thank you for coming out. I hope you have a wonderful rest of your evening and an excellent rest of the year. You've been doing very, very well, so I hope that trend continues from a business perspective, and we will be in contact over these next couple of days, okay? Excellent. Have a great night, and I'll be in contact soon, okay? Goodbye, and I'll see you soon.